This was my house. This one right here. We moved in 26 years ago. And we did the floors, and we put in windows and doors and painted and just put, my grandchildren loved it. My son and my daughter-in-law, my family, we hosted Christmas Eve and Christmas Day here, and everybody was here. My little house that I loved.
The house was built by my mother and father in 1960, and I lived here my whole life, so there's a lot of memories here. If I were to lose this house, it would be very difficult to afford to be able to build a new house, to pay the enormous property taxes they have here. What would I do?
What happens after something this devastating? The truth is that we can go back and look at what happened previously. Let's take a look at one. This is in Paradise. This is the celebrations of 5 years after Paradise burned down. Listen to this.
In Paradise today, as people paid respects to those who lost their lives.
The mood was both celebratory and somber here in the town of Paradise, which boasted a population of more than 26,000 before the campfire. Now that number is closer to 9,300, the mayor says, but it is growing.
The population dropped from 26,000 to 9,000. That was in 2018. This was 18,000 structures. So let's just call them houses, but they're not all houses. There's some businesses there, but 18,000 houses. They lost 2/3 of their population. Butte County is where it was. Look at the population change. The population after this fire, which was at the tail end of 2018, it tanked. You see it here too in a line graph. It was 230,000 before the fire. Now it's 206, and it's just now starting to recover population. But it's not the only one. In 2017, it was the second most destructive fire. The Tubbs fire destroyed 5,600 structures in Napa and Sonoma counties. Sonoma County, end of 2017, we can see the population tanked. Why that's important is because you have a lot of people that, listen to this woman, even if she was frustrated with her county, even if she was frustrated with the politics and the direction of the state, you can tell that she would not leave the memories of her children growing up on that street, of growing up in her house, of watching her neighbors grow old together. I mean, these people, they've known each other for decades and decades and decades. They're going to move. And maybe they try to rebuild and go back, but if they do, it's not going to be the same. Now, let's say there's 10,000 houses that burned down, which is kind of the current estimate. There's 10,000 houses that burned down. I think 10 to 20% of them will move. Okay, maybe a lot of them try to get back in or move in the surrounding areas, but 10 to 20% will probably move out of state. That's a guess, but I think it's reasonable. That means that you're going to have 1,000 to 2,000 houses, not people, houses that move. This does not consider the other people that may be frustrated or consider this a warning sign and decide to make a decision for their lives. This is just people that literally don't have a home anymore and have to make a decision. So let's say 10 to 20% move, 1,000 to 2,000 houses move. Well, we actually know where they're going based on where they've been searching. So this is the migration trend from Redfin, and it shows you that where people move from Los Angeles and where they go. And so people are leaving Los Angeles for San Diego, Las Vegas, Bakersfield, Phoenix, Nashville. Nashville is in the top 5 places that they go. Phoenix, Las Vegas, these places will get some of the population that lost their houses in the fire. Now, you can disagree with me. This is conjecture based on the fact that I know permanent population decrease happens when this happens. I know how difficult it's likely to be to rebuild. And even if you rebuild, realizing it's not going to be the same, people will think, where do I go next? Now, when they have those conversations, you heard it in a podcast with Peter Thiel and Joe Rogan. I've had conversations with many Californians. And when you do it, you look for states with no income tax. Tennessee comes to the top of the list. You start thinking about climate risk. Of course, you're coming out of a fire, you're going to think climate risk. Do you think that Arizona with the water issues might be a concern? Yes. Texas with the power issues and the property tax issues might be a concern, and the insurance issues that are going on in Texas? Yes. What about Florida? Florida has hurricanes, climate risk in Florida. Guess what? Tennessee, it has no insurance problems. It doesn't have surge pricing in electricity. Tennessee is by far one of the best states to migrate to in the United States. And we do see that when we look at this chart right here, which is where Americans moved in 2024. We can see Tennessee, 48,000 people moved to Tennessee, 64 in Florida, 85 in Texas. It's not like people aren't moving. Now, this is net domestic migration, so this doesn't count for births. It doesn't count for immigration. So California losing 240,000 people this past year doesn't mean that they lost population of 240,000, but it does mean that there are 240,000 people moving out of California and moving into other states. Tennessee got 48,000 people. Now, I want to hit this point because Tennessee is one of the smaller states, and it only has 7 million people. And I put this in perspective. Los Angeles has 10 million people. So Los Angeles population is 1.5 times the size of Tennessee. Now, when you break Tennessee out, Memphis is not gaining population. Memphis is losing population. In fact, I help people from Memphis move to Nashville. So people from Memphis are moving to Nashville, which means that of the 7 million people, the net domestic migration, it's only going to where the 5 million people move, which is outside of West Tennessee. So it's going to Middle Tennessee, is getting the vast majority of that. So the point is that 48,000 people is bumping up the 5 million population in Tennessee by about 1%. We are getting 1% growth just from net domestic migration, not including births or any other types of immigration. That is astronomical. So we are getting a huge tailwind from migration, much larger proportionally than a state like Texas or a state like Florida. Tennessee is getting, from a proportion perspective, they are just outdoing almost everybody. We're going to get a lot of inbound people, and these are wealthier people. Now, what's crazy is when you look, the Palisades, the average price in the Palisades, depending on, I just Google searched it, it's between $3.5 and $5 million for a house in the Palisades. Because if 5,000 houses burned down worth $5 million, which is just so much money, I can't even fathom that. And Nashville gets 3% because we can see 3% of the people actually moving out move here. So let's just say it's 3%, whatever. That's 60 houses that are buying $3 million houses. I don't think that's unrealistic. And it's a pull forward of demand. I think it probably would have happened over maybe the next 5 or 10 years. So I think we'll get a bump this year, maybe lower in 26 and 27. That is a personal opinion. That's a conjecture. And the point of that is that people are living off their balance sheets. Okay, nobody in Nashville can afford housing. I mean, when you start doing the math on these mortgages for just a $400,000 and $500,000 house, 7% mortgage, unless you're assuming a mortgage, which I'm helping someone right now get a 2.5% mortgage on a house. We are crushing it. The seller has been fantastic. She's watching this. You've been fantastic. And we're going to get a 2.5% mortgage. This buyer would have never bought had he not been able to get a 2.5% mortgage. So there's things like that out there, but in the general, it's impossible to buy a house right now. And that's making me think that things could get really soft. Now, if we look at active listings are up. They're pretty much skyrocketing right now. And we do expect them, if you look at the pattern of the past 2 years, they're going to start dropping again for the next 8 weeks, probably until the beginning of March, and then they'll start building again. Now, I expect, because I believe we're in a muted year, okay, because of interest rates being higher than they were last year, you can see we're in a muted year. Contract volume, demand is down 16%. I expect this curve to be lower. We're going to be lower than 23 and 24, which is very muted. We're going to see active listings actually build a little bit quicker, in my opinion, than they did last year. And even though they might drop, they might be more of a flat curve than drop, and it could even build. Now, if it builds over February and March, that would be a warning sign to me. That would be a major warning sign. I don't expect that to happen. You can see even in 24, it dropped. In 23, it dropped. I expect it to drop. If it doesn't drop, that's a warning sign. Now, it's not everywhere though, and this is shocking. If you look at contract volume, Williamson County, which is Franklin, Tennessee, when you hone in and you have a lot of money, people end up in Williamson County. You can see they live off balance sheets in Williamson County. That's interest income. That's lots of stocks. Stocks have been doing great. And you can see demand is up in Williamson County. It's a disaster in Davidson County, down 17%. Look at Rutherford County, down 30%. Rutherford County, look at this. It's tanking right now. Rutherford County, that's Murfreesboro, that's near Middle Tennessee State University. A lot of students live over there, a lot of lower priced housing over there. It is tanking. These are interest rate sensitive groups. And this is kind of a large area. 300 houses were under contract in 24, now 218. I mean, it can only go to zero. It's crazy. That's so low. Let's look at active listings. You can see up 18%. But when we look at by county, down in Williamson County. So Williamson County has more demand and they have less options to choose from. Completely, you can see people living off their balance sheet. It's not a problem right now, and it's a seller's market more so in Williamson County. You go to Rutherford County, Murfreesboro, where I just said it was a disaster. Active listings are skyrocketing. Demand is tanking. It looks so bad in Murfreesboro. Actually looks worse than Davidson County. I've been saying Davidson County looks like a disaster. Murfreesboro just took the lead in what looks like a disaster. Davidson County's up though, 23% in active listings. You can see we're getting strong active listing growth. And again, we're going to be watching for that curve to bend down, active listings to bend down. We expect that. If that doesn't happen, that is a bad sign for sellers and a great sign for buyers. I mean, I help a lot of buyers. I do help sellers, but I help a lot of buyers. And personally, I love looking at this. I want it to keep going up. I want my buyers to have many options. And the truth is that there's still sellers markets, even in Davidson County, but it is loosening up very quickly, very quickly. I expect that income-driven areas and interest rate sensitive areas just cannot afford the houses in Nashville. Sellers are now competing a lot more than they were last year, and it's getting more and more. It's piling on. And in areas where it's more competitive, I mean, Williamson County is a seller's market right now, and people are paying more and more and more for houses, and they can, and it's been fine. So Williamson County, I'm actually shocked at how strong Williamson County is right now. It's starting off much stronger than anywhere else in Nashville. And listen, my heart goes out to my friends. Some of the greatest people I've ever met in this world came from California. And they've become great friends, helping them buy. They're job creators. You want jobs. You want good, high-paying jobs. There's a lot of entrepreneurs. There's a lot of businesses moving from California to Tennessee. With that, I hope you guys have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.